Hey, what's going on, traders? It's Thursday, April 10th, 2025, and welcome back to the channel. If you trade Forex or just want to stay sharp on what's moving in the currency markets, you're in the right place. Today we've got some fresh data, some central bank drama, and a few setups that are catching my eye for Friday's trading session. Stick around, we're going to break it all down and get you ready to attack the charts first thing in the morning. Let's get straight into it. Alright, so here's what went down today across the major pairs. Euro to US dollar dipped early in the European session after German CPI came in slightly cooler than expected, 2.1% versus the forecasted 2.3%. Traders started betting that the ECB might lean more dovish in their next meeting. But then, the pair caught a little bid during the New York session when US jobless claims printed higher than expected, 241K, up from 226K last week. That soft US labor data gave the dollar a bit of a headache across the board. Pound sterling to US dollar had a similar story, choppy action all day but finished up about 40 pips higher. There's still a lot of hesitation in the pound due to concerns over stagflation in the UK, slowing growth but persistent inflation. Now US dollar to Japanese yen, that one was a roller coaster today. Early Tokyo session, we saw a sharp drop after BOJ board member Nakamura hinted that the bank may end yield curve control entirely by the summer. That sent the yen flying temporarily. But the pair reversed sharply later on, as US 10-year yields climbed back above 4.35%. Commodities currencies. Australian dollar to US dollar got hammered after Chinese trade balance data missed estimates. Exports dropped over 7% year-over-year, a red flag for Aussie bulls. Meanwhile, US dollar to Canadian dollar barely moved despite oil pushing higher. The loony's been glued to the hip with crude, but that correlation has been weaker lately. Now, looking ahead to Friday, April 11th, here's what's on the radar. 1. US PPI, 8:30 a.m. Eastern. Producer prices are expected to show a slight uptick. The consensus is 0.3% M/M. This one's going to be big for the dollar. If we get a hot read, you can expect the DXY to jump, especially after the CPI miss earlier this week. 2. University of Michigan Consumer Sentiment, 10 a.m. Eastern. This report has gained some weight in recent months because of its inflation expectations component. If consumers start expecting higher prices, that puts pressure back on the Fed to hold rates steady longer. 3. ECB talk. We've got ECB Schnabel and Lane both speaking during the European session. After today's German CPI miss, every word will be picked apart for signs of a rate cut coming sooner than June. Also, keep an eye on oil and gold, both are near critical resistance levels. If gold breaks above $2,380, it could trigger a rush into safe havens and drag USD lower in the process. Let's dive into some setups. Euro to US dollar. We're sitting just under 1.0875, which is a key resistance level. If price breaks and holds above that zone, we could see a push toward 1.0940. But if tomorrow's US PPI comes in hot, watch for a fake out and drop back toward 1.0780. Bias, neutral leaning bullish, unless PPI surprises to the upside. US dollar to Japanese yen. The pair is still hanging around the 153.00 zone. Technically overbought, but fundamentals, especially yield spreads, are keeping it elevated. If BOJ rumors heat up, 151.80 is a key support to watch. Bias, cautiously bullish but watching for sharp yen strength headlines. Pound sterling to US dollar. This one has been forming a tight consolidation range near 1.2630. A breakout above 1.2665 could lead to a quick 100 pip run, but there's a lot of chop. Use smaller position sizing here until the picture clears up. Bias, range bound until it proves otherwise. Australian dollar to US dollar. Stuck in a descending channel, and with Chinese data looking weak, the bias remains bearish. Watch 0.6510 for a possible breakdown towards 0.6450. Bias, bearish unless risk sentiment suddenly improves. Quick look at positioning data. Retail traders are still net short on euro to US dollar. That supports a contrarian long bias in the short term. US dollar to Japanese yen sees heavy long positioning, and that's a red flag for bulls if we get a reversal catalyst. Gold traders heavily net long, which could cause a flush if tomorrow's inflation data beats expectations. Also worth mentioning, liquidity will be thinner as we head into the weekend, especially with Middle East tensions rising again. That could mean increased volatility during the Asian and early European sessions. So here's the game plan. Be ready for volatility early in the New York session. PPI and Michigan sentiment are both market moving. Focus on euro to US dollar and US dollar to Japanese yen for clean structure and volatility. If you're trading gold or oil, tighten stops. Those markets are being driven more by geopolitics than charts right now. Also, don't forget to check your exposure heading into the weekend. No reason to hold unnecessary risk on a Friday if you don't have a clear edge. Alright traders, that's a wrap for today's update. If this breakdown helped you prep for the next session, make sure to hit that like button, drop a comment with what you're watching tomorrow, and subscribe so you never miss a daily forecast. Trade smart, manage that risk, and I'll catch you all tomorrow with a fresh look at the charts. Until then, peace out.